Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE on May 14th. We're essentially halfway through the second quarter, which also means we're halfway through the 90-day suspended reciprocal tariffs, except if you're China, of course, and your 90 days has only just begun. But everybody else, we're on a 90-day count and we're halfway there. But it seems like that's a distant memory to the markets, and the bulls are clearly back in charge. Mike McGlone, senior commodity strategist at Bloomberg Intelligence. Mike, as I say, the bulls are back in charge. Have we now seen the low for the year on oil prices?
Oh, unlikely. Um, there's a story this morning that Goldman Sachs expects that Trump's happy with the crude oil in the range of $40 to $50 a barrel, which is probably WTI. Last year's low was 65 in WTI. Right now we're at 63. This is a bear market, and it's bounced. It's bounced with everything. The stock market's bounced, bond yields have bounced, the dollar has bounced. They're all connected. But even if the stock market keeps going up, crude oil has a problem of oversupply and declining demand. It's a bear market. So I don't understand what's so bullish in this case. And we see what's happening. The good news is finally we're seeing signs of the low price cure in terms of U.S. production. Shale's cutting back, and they should be, because this is what usually does. It takes lower prices. But at a minimum, WTI need to at least stay above last year's low, which was 65. And then you might see a little more bullish, maybe get to 70. But to me, the average cost of production in this country is around $50 to $55 a barrel. We've reached that already. It's a decent support for now, but typically you have to get below those levels and stay below for really shut off the excesses of supply and decreasing demand. I still see a bear market. And a prerequisite for crude oil to bottom and go higher, as U.S. stock market has to go higher. Yet you see the whole world's facing tariffs, maybe not as much as we thought they were a month ago, but still facing tariffs. And I don't see anything but just an elongated bear market. And it's going to probably take some kind of supply shock to really sustain crude oil above 65 to $70 a barrel.
Neil Atkinson, former head of oil markets division at the International Energy Agency. Neil, as I said, 4.5 months into the year now, halfway through the second quarter. Do the international oil markets have a North Star? Is there a direction of travel here? What's the leading data point? What's the point at which we should all be looking at to say, oh, that's going to determine the direction of travel?
Well, there's data coming at us all over the place, not just from the oil market, supply and demand and stocks, but obviously, as Mike was saying a moment ago, we're talking about tariffs, the disruptions to international trade, the effects on the macroeconomy. So there's an awful lot of moving parts here, and keeping your eye on the dashboard is difficult because there's things flashing at you from all directions all the time. I'm with Mike in that. Although I slightly temper my phrase, I see a bearish market as opposed to necessarily a bear market, although Mike has been consistent over quite a long period of time in calling for or expecting lower prices. And we are still in the middle of this storm, the storm that has been sort of whipped up by the US trade policies. You said we're halfway through the 90 days. I'd actually forgotten that, but we're in a situation where the things are starting to fall in place with the talks with China, which have sort of gone some distance, and various other talks which we're told are going on with other countries. So we're still in this situation of extraordinary and indeed unnecessary flux. But as far as the market is concerned, I'm with Mike. I think it is bearish. There is still plenty of
If you think
supply.
it's bearish, you must think that there is a kind of a North Star that's guiding it to be bearish. Is it too much supply, not enough demand?
We're cutting back on our expectations for demand growth. Demand's not falling, but it's not going to grow by as much as we were expecting. And that is a clear trend in recent weeks as analysts and institutions have put out their latest forecasts. Demand growth is weaker in the face of the threats to the global economy from the trade measures and the fact that there is still, although Mike is right, that the shale production we're now starting to talk about, has it peaked? We're talking about lower prices. We're talking about smaller number of rigs, workers being laid off. So, it's we're in flux, but it is definitely, I think, the direction of travel is bearish. Certainly when you use the phrase bullish at the start, or bulls at the start of this thing, I must admit I was slightly surprised, but that's what the debate is all about.
Well, I suppose every market and financial markets and oil. I mean, a week ago in oil, we were below 60 on Brent. Now we're, closer to 70. Yasar Al-Maliki, Gulf analyst at Middle East Economic Survey. Yasar, one of the North Stars, it seems, within the collection to choose from is Iraq and the other non-complying members of the OPEC Plus agreement, Kazakhstan most notably as well in there, because they're oversupplying. Saudi Arabia's led the rest of the sort of OPEC Plus group to say, well, let's all get into increasing supply. Is that the main driver here? Where do you think the main driver direction of travel from a bearish market perspective that Neil and Mike are talking about?
Thanks, Ron, and good morning to everyone. Yeah, well, it's one of the reasons for sure, and it is a quite prominent reason. So, compliant states like Saudi Arabia are attempting to increase pressure on overproducers, and trying to reinstate discipline within the group. But I think more equally important is that they see that bringing back barrels early as demand, enters the peak season, is important, and this is one of the reasons behind the acceleration of additions, in June, and previously in May. And this is to be done before, domestic oil burn significantly increases in the region, in the Gulf, in Saudi Arabia, Iraq, Kuwait, and others, and capping any upside to export. So these reasons, and these dynamics are still ongoing. They could incentivize another acceleration into July, and if that happens, we will have more than half of the 2.2 million barrels per day return to the market. Now, speaking of the direction of travel and compensation, yes, compensation, Iraq and Kazakhstan being able to cut significant production is an important metric for, discipline within OPEC, but both countries,
but we're not seeing that. We've really never seen it. So it's kind of one of those false flags, isn't it?
It's not. They face, significant challenges to achieve that. Iraq is going to.
I don't want to.
Iraq is going to face a lot of trouble in coming months, with higher temperatures, and they need to burn produce more liquids, burn them into power plants. They have a power crisis. Kazakhstan, on the other end, is finding it more problematic to sit down and talk with the IOCs, big names like Chevron and ExxonMobil, and asking them to cut production. So, both countries are saying that they want to comply, they want to cut, but in reality, it is more complex to be done than, advertised in a way.
Mike, does it matter? We've seen we had our own survey question on it yesterday. Who won the trade war between China and Iran? And by an overwhelming majority in our vote, and generally the consensus and all the noise since Paris, or since Geneva rather, was that China won and Trump conceded, and that was articulated in an editorial, or in the editorial board of the Wall Street Journal today, essentially stating that. And I'm wondering, is that important? And I ask because does it tell us where we may go next? Trump's bluff has been called. It was called on day one by Canada and Mexico when he retreated. I think actually the first one was Colombia, if my memory goes back. It seems many bluffs ago, but ultimately this is a consistent narrative now, and Trump's sort of crying wolf is no longer a ticket that people will pay attention to. Your thoughts on that point? Does it matter that the world believes Trump caved on China?
I think that's probably part of his negotiation tactic. And the fact is, he's raised tariffs from the world's largest demand pull importer of goods on the planet to the highest in almost 100 years. Sure, they're not as high as they had expected a few months ago. It sounds like negotiation, but all the world who's been dependent on exporting to the U.S. for decades has to now pay the fee for that privilege, as he calls it, to export to the U.S. So he's accomplished his goal so far, and he's still working on the EU, which is one of the biggest ones. This is the key thing that I learned about tariffs was I used to work at the Board of Trade in Chicago in the 90s, and I went to night school. One thing I learned in MBA classes at night is, yeah, free trade's great and everything. And the thing I learned in trading pits with my customers, yeah, everyone in the world wants free trade as long as they can run surpluses with the U.S. That's the key fact. He's shutting that off. Maybe not as much as initially, but it's being shut off, which is not good for most commodities, most notably crude oil. It's not good for the global economy. And you're really seeing that in commodities. It's unique that on the year, for a while, gold was up 33%. Now it's up only at 23%. Crude oil is down 17%. That trajectory, crude oil down, gold up, is very global recessionary. And part of that's mostly because of tariffs. The point is, it was already happening before he was elected. We are seeing that trajectory. So for the rest of the year, my key theme is I'm still quite bullish gold, bearish crude oil, but the key thing to help reverse that is you need the U.S. stock market to go up. And it just got back to unchanged on the year. So the theme I'm looking at here is there's still a good chance for a recession in this country. We're way overdue for it. We have interest rates high. We're cutting off the fiscal. We have tariffs. The key thing about tariffs is it hurts corporate profits. Corporate profits are starting to decline for the future. So the key theme I'm looking at is by the end of the year, if the U.S. stock market's down, that's pretty severe deflation, sort of being predicted by gold rising and crude oil declining.
Neil, we sort of started out with the idea that there's a lot of noise in the world at the moment, and behind the noise, some fundamentals are getting overwhelmed, perhaps. And one of them is the basics of inventories. China is buying oil and importing oil and fairly healthy levels in the first 4 months, but a lot of it going into storage. We're also seeing reports overnight that inventory is builds this week, and it's, I know, a weekly data number, but generally the trend in America has also been inventory builds. And yet we have oil prices essentially rising. Where do you see the fundamentals coming into play, as you call it, bearish market? When does that start to sort of kick in?
Well, first thing I'd like to say is in response to something that Yasser was talking about is this issue of compliance by OPEC plus members. I actually don't personally think that this is much of a factor because, Iraq, as you were saying, nothing.
Compliance or lack of compliance?
Well, right, lack of. Iraq's not going to change for various reasons. The UAE is too big to punish. And as far as Kazakhstan is concerned, if I were to get a call from the Kazakhstan oil ministry and ask for my advice as to what they should do, I'd say to them, what are you doing in this OPEC plus alliance? Why are you wasting your time? You've got an amazing industry. It's growing, massive amounts of investment. What's the point? Do what Angola did years ago, who actually pulled out of OPEC. Kazakhstan isn't in OPEC, but it's in OPEC plus. What are you doing? Just,
Would they have the flexibility to sort of navigate around Russia in that way, given that they've got to export all of their crude through Russia if they were out?
Yeah, well, sure, okay, but Russia is in the alliance, but there are special circumstances with Russia. So my personal feeling is that Kazakhstan, which seems to be doing it anyway, is just ignore it and get on with what we want to do anyway, with these massive fields which have received tens of billions of dollars of investment over many years. You're just suddenly going to shut this off? No, of course not. Now, sorry, back to the ranch, if you like. As far as the
or storage even.
Oh, storage. Sorry, yes, storage. Well, as I've said before on this show, I don't get too excited about the weekly numbers, although, yes, they are market sensitive and traders look at them. I get that.
Well, the trend has been consistent now, not just 1 week. We saw right through the first quarter in China, a lot of inventory build.
Well, China's a strategic issue as well as what lies under the fundamentals. China has been building crude storage, whether it be, well, in China, the distinction between commercial and government stocks is obviously blurred. China has been building stocks gradually over many years, partly for strategic reasons. And of course, in the current situation where oil prices have been lower for quite considerable parts of this year, currently a bit higher, sure, they've been partly taking advantage of lower prices, building up their stocks for the longer term strategic reasons. So, I don't think China is doing anything particularly abnormal. And in fact, if anything, it makes perfect sense. When prices are lower, you build up your stocks. The US situation, yes, we are in a situation where for the past few weeks we have seen signs of builds, and that's clearly the case. And it is suggesting that production currently, although it's expected or we're told it's going to plateau and might even go into a gradual decline, production still remains fairly elevated. The demand picture is weaker than we might have expected, so it's not a big surprise. I haven't got to hand, I must confess, I haven't looked this morning at the data for individual products within the overall total, so I confess I'm a bit weak on that. But it's all part of this bearish agenda that is currently taking place, despite what you say about the crude price at the moment being a little higher than it has been. But we are, oscillating basically on a news agenda. Who knows what the next outbreak of tariff news may be? We're halfway through this pause, but when we get to the end of the 90-day pause, what's going to happen then?
Well, certainly there'll be some turbulence. You would think. You saw we're still down $10 since OPEC Plus decided to sort of surprise the world with the accelerated increases in supply. And we've talked earlier about the incentive for that, maybe to discipline the group into more sort of adherence to quotas. But a lot of commentary seems to indicate actually the target of the OPEC strategy is A, gift to Trump, and B, to sort of curtail shale's ambitions a bit this year. Your thoughts on that? And now that Trump's visit is underway in the Gulf and will pass by the end of the week, that gift, if you want to sort of put it in that way, that gift of lower gasoline prices at the pump going into driving season will come to an end and we'll get back to price discipline. Your thoughts on that narrative?
Well, I think on both narratives, the Trump narrative and also, say, the market share narrative, I think they are both overblown. OPEC Plus, especially Saudi Arabia and the other members of the Group of A, they already had these plans since the end of last year and before. They extended the cuts into the first quarter of the year because of the low demand season. They wanted to see some drawdowns into the inventories at the beginning of the year, although this was not, well, depends on who puts out the data. This was not successful. So accelerating the tapering into the incoming months, as I said before, is more of a is depending on the two other factors, which is discipline and also trying to get as many barrels out quickly before demand. So the other thing on market share is that if you look at the numbers, the OSPs that Aramco put for Asia recently, they also
they went higher.
They went higher. They showed that the Saudis.
It seemed a bit odd given everything that was going on.
Well, it's for a couple of reasons. One, it shows that they are not there to be aggressive about adding back those barrels. At the same time, it also is a result of what they expect will happen within Saudi Arabia itself. There will be domestic demand for oil, so there will be some sort of a cap on how much they can add. But I think one important aspect that not many people are looking at is the actual impact of the accelerated production additions could still be much lower than the paper increases that we see in quotas. So we saw this happening over April. 138,000 was to be added. The OPEC group had 105. But in reality, they barely added 10% of that. And the reason being that some producers are already overproducing. So at the minimum,
so quotas are catching up with the supply reality. And you don't expect this sort of pre-Trump visit to the Gulf to post-Trump visit, that the strategy vis-a-vis Saudi and this idea of gift to Trump is a bit of a false start?
I don't think so. I think they will base it on discipline. They will base it on what they see happening on the demand side. We could be in for another acceleration into July. and
Yeah.
then maybe we stop and look at where demand is.
Well, they've all
with-
have to go to Vienna in early July and face off to each other. So you can do a lot on Zoom like we do, but once you have to go hand in hand and share a coffee on the sidelines of the OPEC conference on, what is it, July 10th, I think you probably want to put this one to bed before then. Let's go to the survey question, which is sort of the first question I asked Mike. Have we seen the low of the year already? That's today's survey question. Have we already seen the oil price low for 2025, which on Brent was below 60, and and I think Mike mentioned that on WTI it was as low as 63. Mike, one of the answers to that question might be, what is the legacy damage done? Where is the U.S. economy going? Of course, the world's largest consumer of oil, the world's biggest economy, still showing some health in terms of, despite all this turbulence, inflation seems to be still under control. The impact of this month and a half of trade war, is that still to play out? Is there still a kick into the U.S. economy that will see further slowdown and maybe not as vibrant as summer season?
Yeah, right with your question there, Sean. You see it. The data coming out today, retail sales, everything that we have had weaker than expected, PPI and CPI. And part of that is because consumers are cutting back. You've seen that everywhere. Certain things like auto loans, credit card defaults and things. It's a classic case. Now we're going to be getting the data from what really happened from the last few months and see if the market's going to dispute that or not. But the elephant in the room for everything is we had the U.S. stock market. It was down for a while, 15% on the year. Now it's unchanged. That is the elephant in the room. If that can stay flat to to even up on the year, then everything's fine. But we're so overdue for that. We've increased 100% in S&P 500 total return since 2019, the biggest money pump in history, biggest liquidity pump in history. Just giving back 10 to 20% of that this year, which is my base case, is a shocker for normal deflation following inflation. And that's what you're seeing in commodities, certainly crude oil, significant deflation from the inflation. That's, to me, would trickle the whole world down. So I view it, the U.S. stock market right now is just a massive put. It's the risk of it going down is exponential, which is why I think a lot of people in the world are getting out of it. It's 2 times GDP, the most expensive versus the rest of the world in like 100 years. So maybe we'll get lucky. Maybe we'll get out of this. But to me, that's the key thing now for the rest of the years. If that U.S. stock market can stabilize here versus if it normally just drops what it normally does for recession, tilting that way, which is the base case in Bloomberg Economics. And now we have, okay, so we've alleviated some of the fears with China, but there's still 34% tariffs. So that's a big shocker from what was
For
less
90
than
days.
10% before.
Neil, looking at the geopolitics of all of the sort of factors into the energy markets and the infamous geopolitical premium or lack thereof, the big sort of burning literally, we have got the doorstep of famine being choreographed by the Israelis in Gaza, where 2 million people are very, very red alert vulnerable, according to all of the international agencies. We've got supposedly some kind of meeting in Turkey on Thursday vis-a-vis Ukraine, Russia. Do you see any of those issues, impacting the energy markets, if indeed they do find some kind of pause or resolution?
Well, as far as Gaza is concerned, no. I mean, the impact it's had on oil markets, even after the brief situation after October the 7th, it's been basically there's no impact on the oil market or wider energy markets because there's been no change to supply. And so that's Gaza, however horrible it may be. As far as the Russia situation is concerned, Trump has learned a lesson that you can't announce that you're going to fix the Ukraine-Russia thing in 24 hours. He's learning the harsh realities, and Putin, however horrible he may be, is no fool. However, we may be in a situation, which I personally hope, that the United States recognizes that Russia is being intransigent, is playing them along, and there are tighter sanctions on Russia to try and force them to make some kind of deal. So we could have some kind of impact on the market, especially at a time when we are already looking at it being a well-supplied market into a market where demand is not growing by as much. So if you like, there is room to take further action on Russia without it being a significantly important inflationary factor. And the four-letter word you've left out here, Sean, in your introduction there, unless you were going to raise it anyway, is Iran. You know, we have the talks, some form of talks going on between the US and Iran, which I personally think is a good thing. I also personally think, well, when I was at the IEA when all this was going on in 2018, that it was a mistake to pull out of the nuclear deal. I don't think it was a stupid thing to do, but I think it was a mistake. And I think the US is recognizing now that some kind of some kind of deal with Iran is probably going to be a good thing for the next few years. It's going to bring some degree of stability, and the nuclear issue can be revisited if Iran indulges in bad behavior. So there's a lot going on the geopolitical front, as you say, quite rightly so. Gaza, no effect. Ukraine, Russia is an ongoing saga. And we'll see what happens also with Iran, which I think is, in some respects for me, is the most interesting of those three subjects of all.
Well, Yusar, maybe you pick up on that, because we did have Trump comment on that yesterday in Riyadh, where he indicated, fairly positive language, one would say, regarding trying to do a deal with Iran. And the consequence was ultimate pressure on oil exports. It wasn't, I'm going to bomb you, which he had been saying before. Your thoughts just are on where Iran is at, and where the post-Trump visit to the Gulf region, does anything change? What's your sense of legacy of this visit, which is obviously currently underway?
Yeah, thanks, Shane. Trump was a classic stick and carrot when it comes to Iran during that speech. I think there are a lot of interesting stuff happening in Muscat. You have the Iran. I think the sticking point is whether the Americans would allow the Iranians to continue some sort of a peaceful nuclear program. And more interestingly, the Iranians are now thinking of bringing in the Saudis and the Emiratis into some sort of a commercial nuclear peaceful power entity. That was an old proposal, and apparently they are trying to bring that back. When it comes to the legacy of this Trump visit, I think there is one important factor here, or one important, Saudi Arabia is taking a more prominent position within the region. I think one thing that we saw,
but it's costing them, isn't it? I mean, it's an expensive
it's
ticket to get to the front of the class. You got to spend $1 trillion. I mean, that's pretty transactional framing.
Sean, it goes both ways. The Saudis are very interested in bringing foreign direct investments into their country, part of Vision 2030, and it all really depends on what actually happens. So, you could put a big 600, billion, 1 trillion, but eventually, which country is going to, either Saudi Arabia or the US, is going to be more attractive for capital and is going to provide all the frameworks for investment. The Saudis are they have been working hard on this. Vision 2030, they have been hitting a lot of targets. Yes, it has come at an expense, but there is also a lot of progress compared to many years ago. And Saudi Arabia is a very exciting country for many investors and many people. So I think the legacy, the positive thing is that we can see that America is changing its position in the region. It's a more pragmatic, and this works well with many of the countries, in the Gulf. A good example of this is Syria. Trump's announcement that they are going to, or the US is going to lift the sanctions, is very positive. It also shows, it's an implicit message to Iran that we do not really care where you stand ideologically, as long as you're pragmatic, you're ready to play positively within the region and do business.
And that's Syria with sanctions being lifted, a source potentially of what it was, 400,000 barrels of oil. If that can find its way back to the market over the next year, it certainly would be welcome revenue for a bankrupt Syrian government. There's a big Mike McGlone, no way, dude, on the low this year. Everybody more or less agreeing with Mike on that. And we will wrap it up there. Brent crude oil down a little bit today, having a pause, if maybe a stall on down 0.5%, still above $66 on Brent, and WTI a few bucks back. We'll continue to track the Trump announcements and see where they go by the end of the week. And one of the announcements, of course, he made yesterday was the possibility that he himself will end up in Turkey on Thursday if indeed Putin does show up. And that could be that 24 hours, Neil, will eventually arrive at some point. It will be the 24 hours of a deal on Ukraine. But when that 24 hours actually kicks into place is the big question. Will it be this Thursday? We will see. Halftime talk interview coming up with the director of Svelland Capital, looking at the whole structure of the oil market, moving backwardation to contango. Where will that battle go into the second half of the year? A week ago, it looked like contango was winning the tug of war. Will backwardation get a grip back onto this market? Neil Atkinson in Paris, thank you so much. Yesar Al-Maliki in London, thank you. And Mike McGlone in beautiful Florida, thank you so much for your contributions today. All the best. Have a great rest of the week.
You too.
Thank you.